today we're talking with Sue Vickerman, and Sue is a certified public accountant, a CPA, and we'll be getting some questions answered that you have regarding finances and business and lots of different aspects. So I have quite a few questions to get to you, so we'll get started. So one of the first things people ask me, they say, who does your taxes? Do you have a good accountant? And I want to clarify that obviously an accountant or going to H&R Block or something is way different than having a certified public accountant, both in information and background. But Sue, why don't you tell me more about that and what's the difference for the average person?
Okay, well, as soon as you brought up H&R Block, I'll kind of focus on them. So basically, the people that are doing those income tax returns have usually taken a 6 to 8 week tax course, and that's it. They're live with doing your taxes. A CPA or an accountant, even accountant, has got to have 4 years of college education, a bachelor's degree usually in accounting. To be a CPA, you have to take that one step further and you have to have 5 years of college education credits. You have to have, I believe it's a minimum of 24 credits in accounting. And then you take the unified CPA examination, which is tested throughout the United States. And it's 4 parts.
Which is not easy. My father is actually
Horrible.
a CPA, and I remember years ago him going through that and with a hellacious aspect. I guess one of the things that I've seen as a business owner, I mean, I've used a CPA now all my business years. In my first business I opened, actually, believe it or not, back in 1980. And I think the difference, the easiest way to say it is an accountant helps you with what you did. A CPA helps you make sure you do the right thing before it's done, and you save yourself problems in the future, as well as tax savings and such by planning ahead. Is that true?
Yes, I would say actually we also help with what you've already done. One of the things I like to tell people is before you, if you're thinking about starting a business or thinking about changing something in your business, check with all your professionals first, not just your CPA, but also your attorney, probably your pension people, because we're all kind of intermingled. And I like to think that if you're proactive that way, it can usually save you a lot of dollars on the end. I tell my clients, hey, you can spend a few dollars up front or a lot of dollars on the end for me to fix it.
Right.
But an accountant, to me, just a regular accountant can help you, do your bookkeeping, can probably do some preliminary tax prep or basic tax prep. I think what a CPA brings to the table is that different level of expertise. We've usually had a lot more years of experience. A lot of us have come from a public accounting background, which is a very focused training. Yeah.
So what do you look for? If you're looking for a CPA, I'm talking to people who are watching this from all around the country in various parts, but if they're looking for a CPA, what's the best way to find someone who's not just is certified, but actually knows the way around taxes and prevention of too much paying of taxes?
I would say number one is referrals, people that you already know who are working with a CPA. Go to the state society of CPAs in the state that you live in. They have a list of certified public accountants that are, I guess, on good terms with them. And then when you actually and I would also meet with 3 CPAs. Get 3 kind of referrals, go meet with them, because you have to have chemistry with that person. You've got to be able to trust that person, and it's not always going to work. I mean, there's going to be personality conflicts, so go with who you feel comfortable with, and go with a list of questions. And you can actually get a list of questions from the state societies that you work with, what kind of questions you should be asking the CPA.
Okay. So people who are watching this may be starting a business for the first time, or maybe they have a business for a bit and they're really not sure. Is there things they should look for themselves before they start that process to make sure their ducks are in a row, so when they come to you, they're not fixing a lot of problems that happen? What should they do when they start their business to make sure their numbers are in place, or whatever? I'm going to lead you on that. But
here in Washington State, and here specifically in Olympia where we live, we have the Thurston County Economic Development Council, and within that they have the Small Business Development Council, and it's a federally funded agency, and I believe they're throughout the U.S. I often send new business people who really don't know what kind of entity they should be, how to keep their books, all those basic questions that, yes, I can help them with. but usually they have a cash crunch too because they're just getting started.
Right.
The SBDC is a federally funded free program. So I often send people there first.
Okay.
And then it's kind of pay it forward, if you will, because
Right.
those people usually down the road when they're a little bit more established or when they need to file their income taxes for their businesses
Right.
will come back.
There are definitely
So-
some great resources. They have retired business people who are volunteering, and we'll put some
Yeah.
information on the screen, some links for you of where to go to. I know there's the Small Business Administration has some help with that, and some.
yeah.
I think it's called SCORE or some other
Yeah,
number of
SCORE,
different
yeah.
groups that help you
SCORE's
with
a very
that.
good group, yeah.
So I think specifically, massage therapists and people in the healthcare field, they went into it because they're really good at being helping people, and they are able to use their hands. And the idea of numbers it's foreign to them. What's the best way for them to set themselves up? I mean, people say, "Hey, but how's Quicken work for numbers?" And I always say, "Geez, look at QuickBooks. Quicken's fine for your home checkbook, but when you're handling taxes and prepping for that, yes, it's more expensive. But would you have a recommendation of what program? This is, of course, 2015, but that will change over time. But a preference for either what program or what program should have to make it viable."
Yeah, I definitely advise people to get QuickBooks. And you don't need the expensive one. You don't need the online one. Costco, Best Buy, they usually have sales on QuickBooks, anywhere from $150 to $200. And if you don't have employees, that QuickBooks will last you for 5 years. If you have employees, you are forced every 3 years to update it to the latest version because of the payroll tax tables. But Bob hit on a very good point. Quicken is for your household budget. And I have 2 clients that use it for their business. Not a good idea.
It creates problems, right? Yeah. There's so much more to it. I know
Yeah.
when I gave my program to you, my database, your company went through and recategorized everything to make it more simple. And at first I thought, what are they doing? Then I realized, oh, that makes much more sense because of the categories and such. And I can just email you through, not email, but I upload through a very secure server my backup file. You can do my taxes, update that, send it back, and I can restore it to my computer. And I can sit in the privacy of my own home, which makes a good point. Your CPA doesn't have to live in your own city. You actually can have somebody anywhere in the country.
Or outside the
that.
country.
Exactly.
I have clients that live outside the country too. Yeah, it's a very global, mobile world.
Yeah, in the old day we had to bring our, we had to burn a CD and take that to our CPA. So, okay, so is there a downside to using someone like H&R Block? I don't want to pick on H&R Block, but these tax companies that have people who've taken an 8-week course. I mean, I look at those and you've already saved me thousands of dollars helping me where they would maybe didn't know the fine details. Is there any insight of what the downside of using companies like that?
Well, I know with the training course that H&R Block go through, it's primarily for individual tax. I know they do business taxes, which I don't think they should be in the business of doing. And I've also fixed a lot of those returns that, down the road were definitely wrong. But, for a simple return, so somebody with just a W-2, maybe even a mortgage statement, they probably do a really good job. A CPA would be too expensive, and you don't really need that level of expertise. But once you have, if you're a business that's a sole proprietor or a single member LLC and filing a Schedule C with your 1040, you need to then be talking to a professional, to a CPA.
Interestingly, years ago, I was talking to a CPA, and he said, we use Intuit's TurboTax. Basically, it's the same program, different logo. He said, but what a CPA can tell you is, say I fill it out and I say my car was used 50% for business and 50% for personal. He says, what the program doesn't tell you is if I use it more for business, there's a different tax advantage.
Exactly.
Now, so the programs that you buy, you can answer the questions and fill the blanks in. A CPA can say, hey, watch out for this, make sure you're doing this ahead of time and save money and prepare yourself. So we'll talk about more about that in a moment. But when it comes to, I guess, these people who are starting businesses out for the first time, they're getting into business and they want to set up, I think it's really, there's a hip, everyone's getting these LLCs because it sounds great, and they say, "Oh, I have an LLC," and I think, "Oh, crap."
Yeah.
Sorry, but I'm an S corp, and there's a good tax advantage. Tell me why I should be an S corp, for example, versus an LLC as a business.
Okay, it's basically down to the self-employment tax. So with an LLC, every dollar that you earn is subject to self-employment tax. In an S corporation, at least the way the current tax law stands, it is not subject to self-employment tax. However, with an S corporation, you do have to pay yourself a reasonable salary, and that's usually something that you can talk about with your CPA. The other thing with the LLCs, why they're so popular, is because they're easy to set up, so attorneys like them. So it's the attorneys usually that are the driving force with the LLC. And I will say that for holding real estate, absolutely, hands down, definitely an LLC.
Right.
But if you're in any kind of a business, an operating business, S corp.
Yeah, and it's not that hard. I remember having two windows open on my computer screen, and I went back and forth between the IRS and the state of Washington. I got my employee identification number set up, and I opened up my corporation and went back and answered the rest of the questions and had my S corp set up in one evening, drinking coffee, just sitting back and taking care of it myself. So it's not that difficult.
No, it's not.
Maintaining it comes down to, of course, having minutes taken for your corporation and such. But that self-employment tax is huge, and we don't want to give all the information about that here, but I save a lot of money by being an S corporation, where people who are LLCs do not have that same savings. So be sure to ask your CPA about it. If they think there's no difference, find a new CPA. So people are often concerned about taxes. They have to prepare for. Washington State, we have what's called a regressive tax state, which means I can have $1,000 in income and $1,000 in expenses, have zero profit, but I get to pay tax on that regardless of my profitability, which pretty much tells me don't invest any money and there's no reason to spend. But the point is that we have to worry about having preparation for taxes. So you might be on a quarterly or an annual filing. If you're a huge company, maybe monthly or even weekly. But is there a way for them to budget, to set aside, or should they talk to their CPA about maybe a formula for putting some money aside in an account to pay taxes? What's the best way to handle that?
I would say the best way to handle it initially is to find out because everybody always tends to think of income taxes, the IRS, but there are some states that have income taxes. As Bob just said, here in Washington, we have what's called a gross receipts tax. So you pay it on your gross revenue based on the locality that you live in. So I would say start off by asking your CPA, what taxes am I exposed to? Because a lot of people get sticker shock. They know about the IRS and income taxes, but they don't often know about those other, what I would call hidden taxes, the state and local taxes. Once you know what taxes you're exposed to, what category you are within that state or locality, then you know what for us it's the business and occupation tax, what percentage you're going to be paying at, so you can kind of budget that way.
Let's talk about payroll. And people think, well, I'll never have any employees. And, I started my practice back in 1991, and within 6 months, I had 2 employees. Immediately started hiring employees. My business grew, my income grew, but I had to pay taxes on them as employees, and when I prepare that. And I guess one of the questions comes down to, is there something we should be aware of when we're paying for employees? I know, but not paying the taxes that we've pulled out of their checks is a big problem if we don't do that. But any insights on what to watch out for or what to prepare for?
The common problem I see is, once again, you have your employees, and because at some point in your life you've probably all have been an employee yourself. So you know that you have your withholding taxes and the Medicare and Social Security taxes. What a lot of people don't realize is that there is also a federal unemployment tax that has to be paid, and also a state unemployment tax, and oftentimes what we call L&I, workers' comp, those kind of taxes, which are all based on the employer and not necessarily the employee.
Right. So I'm an S corporation, for example. So I'm actually an employee of my company, and it sounds funny, but I pay unemployment tax on myself. And if I don't pay that to the state, I think the federal, as a penalty, it's even more money than if I had just paid the tax to begin with. So if I ever fire myself, I'm covered. But I've got that taken care of. Of course, I can come to you and I can have a CPA do all my payroll for me, but I have a couple of employees, and there's some payroll services out there, companies that will do that. Even QuickBooks has an option to kind of build that in and pay for that. Any thoughts on or what variety of services that people might think about using versus having a CPA handle that?
Yes. What I advise my clients is, if you have 5 or less employees, it's worthwhile to purchase the payroll module from QuickBooks. It's a very good payroll module. It's all interactive. It also produces the quarterly payroll reports that you need, the annual reports that you'll need, like your W-2s and things, 1099s. Once you get past 5 employees, it's worth looking at the various payroll services. The two most popular ones are ADP and Paychex.
Right.
I lean more towards ADP. What I've seen from them is a really good service, a really good job. But Paychex, does a good job too. There's others out there, but those are the two that I'm more familiar with and that I've actually been exposed to. So that's kind of the bright line for me. 5 or less, try and do it yourself. I know the QuickBooks module right now is about $400 a year.
Right, it's not cheap. But...
No, but going to a ADP or a Paychex is can be $200 or $300 a month.
Right, exactly.
So when you kind of do that
right.
comparison.
Okay.
Yeah.
And of course, having employees helps with an S corporation. Again, you talk to your CPA more about that, but having employees to help carry the load and bring the income in helps from a tax standpoint. Let's talk about credit. I think one of the number one things that people get themselves in trouble with is credit, and the other side of credit is debt. And number one reason companies go under is because of starting to carry too much debt. And people get frustrated. The bank won't loan me money. Well, if the bank doesn't want to loan you money, there might be a reason that you're a bad bet. Yeah. And so concerns about that, what are your thoughts on debt, and what have you seen, how that affects companies, or things that they should prepare for or watch out for?
So I always, my whole thing is, hey, it's always better to not have debt than have debt, but when you're in a growth mode, you need that leverage. You've just got to be smart with it. So banks, I think, in the last 4 or 5 years, because of the whole economic debacle, have gotten a little too restrictive with it. I'm seeing them loosen up a little bit. But be prepared when you go. Have good financial statements, because they're going to want to look at your balance sheet and your profit and loss. And a lot of people don't get that. They just think, well, here's my bank statement, or here's my profit and loss. Well, the balance sheet and profit and loss go hand in hand. And then, go with your business plan. Let them know what it is, why you need the money, why you're growing. Show your projected earnings so that you can show that you can actually repay that debt. Right. And just don't overextend yourself. Right. The ones that I see that fall is the ones that were over leveraged and the projections didn't
well, they also end up borrowing money and then using that money to live. I mean, you're borrowing money to start a business off. Living on money you borrowed to run your business and start it is really problematic, and I usually see those companies fail. So when you start, of course, part of this program is a business plan. The bank is going to want to see that plan. Yep. So when you have that put together, it's not just for an assignment. It's actually a good purpose for it. But you put that together, you put together a plan of how that money is going to be used to start the company. But one thing, too, I think that people don't realize is they have a line of credit.
Yes.
Those lines of credit, when you borrow money, they can ask for it back. And they can say, you know what, we're going to call that line of credit due, and you have to have the money to pay for it. So lines of credit are not a loan so much as it's a temporary, hey, I'm going to give it to you, but here's a string, I want to pull back when I want to. So,
yes, I would say with lines of credit, and I encourage all businesses to get a line of credit, because all businesses have what I call the peaks and valleys. So you have your periods where you're cash rich, and then your periods where you're not, but you still got to cover payroll, pay the rent, those kind of things. But with a line of credit, there is a 30-day period every year, and it will be determined by the bank. Like, for example, the company I work in, ours is September, so that's when it's renewed every year. But before we can renew it, we have had to have had a 30-day period where we have never used that line of credit, and its balance is zero. So we owe nothing on it.
So if you're going to get a loan for your company to start off, that's different than a line of credit. So you should have both. And some people use their credit card for that line. Be careful with that. I mean, I make sure I pay mine off. Actually, our company pays our credit cards off 3 or 4 times a month because I don't want to have that on there. But make sure that you're able to have that cash ability to pay that off, or know it could be called upon.
Yeah.
So some people are going to say, hey, I want to. We're going to be covering location in a different part of this training, but they want to open up their offices and such, and they say, well, maybe I can just work out of my house. So I'm going to go ahead and use this part of my house for my my business, and you know what, I'm going to write that off on my taxes. Any insights on writing off square footage percentage as well as writing off power, water, washer and dryer, that kind of thing for sheets? Any thoughts on that?
Yeah, there's actually two methods now that the IRS came out in 2013 with what they call the simplified method, and I'm finding a lot of people are preferring that. Under the old method with your home office, you had to have a designated area, which you still do with the simplified method. So let's take, for example, you have a spare bedroom, that's going to be your designated area. So you have to, under the old or original method, come up with, if you're in a rented place, what your rent is. If you're buying your property, your mortgage interest, your real estate taxes, your utilities, housekeeping, security services, any expenses associated with that home. And then it gets, for example, if you have a 2,000 square foot house and your designated office space is 200 square foot, then 10% of everything, all of those household expenses are deductible, providing you have net income from that business. If your business ends up in a net loss, you still get the mortgage interest and the real estate tax deduction. They go straight to your Schedule A. But everything else, the operating expenses as they call it, are suspended and can be used later down the road. The simplified method simply says that, hey, instead of collecting all of those expenses together, again, we'll go with our example, the 200 square foot office, the 2,000 square foot house. So now 200 square foot multiplied by $5. So $1,000 would be your write-off for the home office without doing anything.
Wow, okay.
Yeah. The nice thing about the simplified method too is that you don't get the additional depreciation deduction, which you do if you do the original method. I think there's pros and cons to that, because if you ultimately sell that house, any depreciation you have taken on that home office is recharacterized and it's capital gain.
Right.
For those of you that,
right.
If you're single and own a home and sell it, the first $250,000 of gain is not taxable. That goes to $500,000 for married filing joint. But if you have had a home office and taken depreciation, that piece of depreciation is gain.
Right.
So that kind of puts some people off doing the home office. Again, with the simplified method, there's no depreciation, so there's no gain recapture down the road.
Right. So something that's kind of interesting is, of course, when I purchase something, I might buy a product and I spend $100 on paper for my copier, and I used to write that off of my income I'm taxed on my profit. But then there's something called a disabled tax credit. So if I buy an electric massage table, for example, and you can read it's in Title 26, Section 44, but it's a disabled tax credit area. If that table becomes a device that allows my client in a wheelchair, for example, to get into my office easier, you don't just write that off. Instead of writing it off, you want to tell your CPA about this, because they actually can take money, hard cash, off their tax bill. How does that work when I talk to my CPA?
I would say the first thing you need to do is alert your CPA to the fact that you bought this disabled asset, because all we would see if we just took your books, we would see that you purchased a massage table.
Right.
Well, we wouldn't know that it had any special features to it. So if it's something that is, for the disabled access credit, then just alert your CPA to the fact that it is. And the way it works is you get to take whatever the cost of that massage table is. What would be
usually it's going to be a couple
costing?
of grand at most.
Okay,
yeah.
so that so $2,000. So you can take $1,000 of that right off the top as a tax credit. So on your depreciation schedule, normally you would put that asset on there at $2,000, the cost of it, and then depreciate it over probably 5 years.
Which means I get to write off $200 or $400 per year for 5 years.
Basically, yeah. There's an accelerated depreciation, but
right.
let's just use your example. It's
right.
just easier. But anyway, instead, what you would do is put $1,000 for that asset on that depreciation schedule, and the other $1,000 is shown as a credit on your tax return. And a credit is a direct reduction of your taxes. It's not like a deduction. A deduction depends on what
Right. I'm only
tax
gonna get a
bracket you're
percentage of
in.
that money
Right.
back,
A credit is a dollar for dollar reduction of your
Right.
tax liability.
There's a cap. It has to be at least 250, but no more than 10,000 250. But again, ask your CPA. It's very interesting. You had mentioned something earlier about making profit, and that brings me to the point of some people are thinking, hey, I'm just going to keep my business as a way to write stuff off. I'm just going to, every year I'm going to make zero money. It's going to be awesome. I can pay for my trip to Hawaii. I can pay for my new whatever. And they don't make money for a certain number of years in a row, and the IRS says it's not a business anymore.
Right.
Tell me more about that.
That's called the hobby loss rules. And so what the IRS say, and it's really common sense. No one is going to be in business to make nothing.
Right.
So what the IRS do is they say if 3 out of 5 years you have not made a profit or you've made a loss, they potentially can come in and audit you to see if really it's more of a hobby than a business.
Right.
And the typical businesses that they really zone in on are anything to do with horses, dogs, anything that's got an element of personal pleasure, car racing, those kind of things. They also, for some reason, like to zero in on attorneys that have these separate businesses. I don't think they like attorneys, but
yeah. Isn't it Shakespeare's?
So if it's a horse breeding or horse racing business, it's 5 out of 7 years. So they kind of they give you a little bit of benefit of the doubt, I guess. But if you're doing a regular, like a massage therapist.
Yeah, you should
clearly there's not a heck of a lot of personal pleasure, I wouldn't have thought, in that. It's not like
right. So you should be a bit more profitable. But just know if you make a loss 1 or 2 years, that's probably not a big deal. But if you keep doing that, you're finding a way to write off all your personal expenses and your trips. That's going to be a flag for them.
It definitely is.
That's right. Yeah. So, any more thoughts in general as far as just helping people who are not financially savvy, working with accounts or opening a business account? Any thoughts about the idea from setting up their business and how to work with banks, or any general thoughts for the therapists who are opening a business up?
Again, I think it's going to come down to your relationship with the CPA. That's why I think you should, interview at least 3 so that you've got some kind of chemistry.
And do it right away.
Yeah, do it. Yeah, there's nothing worse than having somebody that's been in business for a year and they come in and they're set up wrong. They're an LLC or, a C corporation, even worse.
Right, exactly. Tax
so they're set up totally incorrectly. They tried to do it on their own. The internet is great, but it's also not great. So, no, I think right from the get-go, get some good sound advice.
So people are going to oftentimes come to your office. It probably happens more often than not with personal taxes, but it hands you a box full of receipts in no particular order. Is there any thoughts on record keeping? Any advice for you can give out?
They usually only do that once with me, because then when they get the bill, my time is money to you is the way I put that. So I will work with people. I'll show them how to be organized. Be proactive. Again, when it's getting ready for tax time and you're thinking about getting your documents together, call your CPA or pop in and just say, what's the best way for me to get organized? Trust me, we'd be more than happy to help you with that. Once you're established as a client, at least our clients, we send out every year what's called an organizer. It's just basically a paper document that illustrates everything that was on your tax return the prior year. It's a aid to help you get prepared for your current year taxes.
Okay, and something too people don't really think about is we have these multifunction copy machines. Often you'll have a printer for your office, and those can scan paper documents into a PDF. Mm-hmm. Those can be stored. You can change the names. You can do all your receipts for your rent, and you can do all your receipts for medical, whatever you're doing, and just name them and put them in folders. So when your CPA might ask for something, you've got a copy of it right there.
Sorry, go ahead.
No, I was going to say there's a brand called Neat out there. It's a kind of a pain in the rear for me. I've tried to use it. But I found that my brother multifunction machine, I just shove a stack of stuff in there and just copies it out nicely for me. You can scan it right to an email even. So if my CPA says, hey, can you show me this? I can pop her an email with that document.
I was going to say another one too is, I know we talked earlier about getting QuickBooks and things like that, but I've also come across new businesses that they don't have a lot of volume. So If you're pretty good with an Excel spreadsheet, I can give you a template that you can set that up where you just keep track of everything month to month,
Right.
instead of doing it all at year end. There is nothing worse than getting to January, February of the following year and trying to figure out what was that deposit for that I did on March 5th of last year. So if you do things currently, whether it's weekly, monthly, but be consistent and stay on top of it.
Some people have said, hey, I don't need a receipt because it shows up on my credit card bill. So I took a seminar from me, for example. Oh, it's no big deal. It's on my credit card bill. I'll just show that to the IRS. Is that good enough? Or what do they
Actually,
need?
credit card bill receipts are a good, yeah, as long as you can just, highlight it, show that it was really a true business expense. Yeah, credit card receipts are fine.
Okay. And of course, they should have a business credit card and a personal credit card, and same
Yeah.
with checking accounts.
Yeah, absolutely with a checking account. No ifs, ands, or buts there. With a credit card, it can be a little bit more commingled. You just have to, on your statement, highlight what your business expenses are. But with a bank account, absolutely separate bank accounts.
Right. Okay. Very good. All right. Well, that's all we have for today. So thank you much to Sue Vickerman. We'll have her contact information for you as well if you want to talk to the Armor Vickerman about your financial needs. But again, talk to a CPA before you get too far along in your business. Make sure you talk to the various resources and contacts we give you for free advice as well. But good luck to you. So thank you.
Yep. You're welcome.
All right.